Good day, everyone. This is Anne. I'm so sorry I couldn't hold Zoom call this week because I have to take care of stray cats and dogs. I need to bring them to the vet for checkups to make sure they're okay, and so many of them also need to be spayed. Well, I hope that all will be done in the next few days. And so today I make a video to share with you my trading plan for the next week. So this time I will share with you just major pairs. In case you do not trade any of these pairs, because I know some of you trade just Bitcoin or probably only gold, it doesn't matter. I hope that you will learn something from this video, at least how to analyze the market bias from the higher time frame, and then so you can make your own trading plan, what to do for the next week. Either you will focus only on buy or sell, okay? So last week I mentioned that euro dollar is gonna go down, and hopefully some of you got some nice pips who trade sell on euro dollar. And I notice right now these coming weeks it looks like that euro dollar is still very bearish. It's obvious, you see, like it's really going down. There may be some retracement, but I will still focus on sell. If you are already advanced in trading, you may be able to do counter trend, because if you look at this, let me show it to you. Look, the market break above, retrace, going down, and it retouch, and then it may bounce. Well, we are not sure about this. It may bounce, but there are also so many order block which is not hit yet also at the bottom. Okay, let's take a look at weekly. Yeah, obviously this is bearish and the market is already go down, you see, but let's just focus on D1 because I am a day trader. So right now when I see that the market on D1 is bearish, so I take a note that the next week I will focus only sell, even though sometimes I have to wait for many days to sell because I will wait in this instance the price to come back to the order block. In this instance I'm going to show it to you where is my order block if I take it from D1. This is my swing high, this is my swing low, and then there is break below. So this is break of structure, and then so my order block is the last bullish candle here. Alright, so right now I know that I will wait probably so many days to come back here. It doesn't matter, but that is the safest way if we want to trade based on the market bias in the big picture from the higher time frame. Unless, like I said, if you already accustomed to trade the order block or trading in general, you can actually counter trend. You can see buy in a lower time frame, and then you know that the market can reach this. Bear in mind, when the market is very strong, sometimes an order block is not hit by the price at all. Maybe the market will just go just a little bit around here and drop again. Okay, so that's why I will only share with you the market bias where you can trade. Okay, I personally sometimes I do a counter trend, but not that often. And I want to tell you this, when you do a counter trend, sometimes it makes you become over trade. I don't know, for some reason that when you do a counter trend, you want to keep trying. I think it's the time. So it's better to just focus based on the market bias from higher time frame. You may still make some losses when the market bias is sell, but it's still a lot safer than when you do a counter trend. Okay, so let's go to H4. Maybe you can refine it. More or less is the same. Yes, you can refine it just like that, but it doesn't matter. So for now we can go to H1. Oh, take a look at this. There is a gap. I'm very sure that the market somehow someday that the market may fill in the gap. So this order block is a very strong order block. Okay, so when I take a look at H4, this can be an order block, but since I see it on D1, I would just take this as my order block. So I will put an alert over there, okay, and just leave it. So in this case, we know that for the next week I will focus on sell, even though I don't know like how many days it will reach this area. It's probably never be reached at all. So I will also take a look at market bias here on H4. The market could just reach in this area and then hit here and then go down again, or reach around this area and then go down again. It doesn't matter. My order block, I decided I will only trade when the price reach this area, unless it makes another high and then I will see another break below, then I will make a new order block below this one. Okay, but for now, because there is no retracement in the market, so this is my order block, okay, which I take it from D1. Now take a look at GU. Whoa, GU also is really bearish for now. Let's take a look on weekly. It's the same bearish. Take a look. Okay, it's a breakout. Whenever there is a breakout, the market usually retrace above and then going down again. But again, in this case, overall is bearish, even though you still can do counter trend on the very lower time frame to reach in this instant. Let's see, where is our order block? Last week I showed you in Zoom call that I made an order block from H4, not D1. That was because I saw a very nice order block on H4. So it doesn't matter you want to put order block either from D1 when you read the market bias. It doesn't matter, it's the same. So this is my order block, and then this is my swing high, swing low, this whole box, okay, because it's a sideways and it's a breakout. And you want to take a look, okay, again, to me the market is still bearish. If you already accustomed in trading, you can also prepare to buy, because I see there is an order block here. You know, when we talk about D1, when you go to H1 or M15, it can actually a massive move, and then you still can aim probably 1 to 10. But if you against the trend, like for example here on the big time frame, it's bearish, but then you want to buy because you see an order block here, try not to take more than 1 to 10, okay? That is the maximum, my recommendation. Even though there is an order block here, it's probably reached like 1 to 30. But again, if the market is very strong bearish, it may retrace just a little bit and then go lower. So if you want to do counter trend, please be careful. Even 1 to 5 is more than enough on counter trend to me. So this is the breakout structure. And here, oh, actually it has been filled by this one, even though it is not a breakout, but it may be touched twice. You never know. You know, this has been filled, even though there is like no breakout here. Based on D1, probably on H4, this is the retracement where the market was hit. I'm just analyzing from D1, so there is possibility the market could touch this area and then retrace above before it continues down. So but be careful if you want to buy around this area. Just make sure you do not take too much. Take profit 1 to 5, 1 to 10 is just enough. But anything can happen in the market. You see, when you touch, it can break through this and keep higher. That's also possible. We will just see case by case how the price react around this area, because when we take a look, okay, the market usually bounce at the very significant level. It touched several times. Look, 1, 2, 3, 4, 5. Well, right now it's almost 6. This one didn't touch, but this is a very important area, so the market may bounce, and we hope that it will reach our order block here for us to be able to sell again. So when it comes to the order block, there are so many possibilities. There are so many order blocks. Like, take a look at this, okay? Now this is another order block. Okay, I just noticed this one. Okay, so this is swing high, and let's say this is your swing low. Look, this is an order block. This is break of structure. This is an order block, right? But it didn't work. So if you want to do counter trend, you may want to buy like around here. We don't know what happened, but then last week we already know that it was bearish, so we all want to focus on sell. So that's why when you see an order block for buy, you really want to be careful, because this is a counter trend based on the higher time frame overview, you know, market bias from higher time frame. It's also the same to this instance, okay? If you think this is your order block, you also want to be careful, the same like this. If the market is really strong, it can trust below over here. Why I said there is possibility from here to bounce again, because this area, it looks very strong to me, because it has touched several times over here. So the market keep trying, you see, to break below, and it has failed. 1, 2, and then now this is the third attempt. We don't know if this break below, it probably could go a lot lower. Okay, so for those who want to trade on GU, I would suggest you just focus on sell for now, unless you want to risk to buy around this area, but be careful. Okay, now let's go to H4. Let's see how it look. Oh yeah, look at that. If I make this really small, take a look. This is on H4. This is the order block, right? It could bounce here and go up if you are a counter trend trader. Let me make it big. Look, this is swing high, this is swing low, and then this is break of structure, and this is your order block, which previously did not hit, and the market keeps going up. Now when we take a look, it's almost touched. We don't know. So again, if the market goes here, yeah, you can set an alert here. Okay, but again, this is the counter trend. Okay, so the market goes here. What you can do when the alert goes off, you can go to a very small time frame, let's say M5. Okay, you wait for the break above and then find the order block from smaller time frame. There is a question like, do I have to trade within the zone? No, you don't have to. Sometimes the market touch the zone, the alert goes off, but then your trade could be around this area, let's say on M5 or M15, because you find the market just break above, it's outside the zone. Do not be confused. Whenever I put an order block from higher time frame, it doesn't mean you have to trade inside this order block. Sometimes the market touch, probably your entry will be around here on the smaller time frame. Okay, don't be confused with order block refinement. Okay, what I do like this, take a look. If I refine the order block from D1, for example, this is my order block from D1, and then I go to H4, you can refine your order block to make it become smaller as long as it is within the zone. You cannot suddenly jump, okay, this is my order block. No, because your order block from D1 is here. So you gotta find where is the valid order block. In this instant, this one, right? So that is your order block. So it's okay. You make it a little bit above because that is the valid one. This candle still within the order block zone from higher time frame. And now let's take a look on H1. This you can also refine it into here. When you refine, take a look here. Now this is on M30, okay? And then let's take a look again. Still the same. Let's take a look again here. This is on M5. So you can keep refine your order block into smaller and smaller. It doesn't matter. The most important thing, if my order block is coming from D1, I can just put an alert over here. So the moment later when the price goes off here, and then I will take a look at the market condition on lower time frame, then I start looking for opportunity after the market goes inside. But it does not mean that you have to trade within the zone. Okay, what you need to do is you find smaller order block formation from M5, for example. Okay, and then that may happen below or somewhere within, or could be the market thrust above but then come back and then you find your entry. That could happen. So there is difference between when you refine your order block from higher time frame to M5 to make it smaller, and also when the alert goes off, and then when you start looking for your entry, you may find your trade entry below. Let's consider this point of interest is the best chance for you to start selling wherever it is, as long as it is close around within the blocks or below the box or a little bit above the box. It doesn't matter. Let's take a look at dollar yen. It's still up, so we still focus on buy, especially there is already another breakout. So this is my swing high, this is my swing low, and this is the break of structure over here, and this is your order block. If it breaks above, your order block is the last bearish candle. So let's go to H4. Let's see the condition. And yeah, you can also make it smaller over here because it's still in the zone. Unless this one, I think it's already hit last week. Someone posted in the group. Swing high, swing low. This is swing high. Oh, sorry. This is swing low. Okay, swing high, swing low. And this is a breakout based on H4. And this is your order block. Yes, it's already been hit. But who knows, the market can still going down and hit the order block from D1 over here. But again, if the market is very strong, this can keep going up and broke this level. If it breaks this level, well, you just can say goodbye for now to the order block that we draw because it's already hit this one, right? It's keep going up, and then so you just find another new order block. Okay, so you know US dollar Japan, you only want to focus on buy. Now let's take a look. So the market is still going up. So let's just make this a box. Okay, that's fair enough. So this is my swing high. This is my swing low. Okay, I can consider this as my swing high. Okay, and then here is your break of structure. And your order block is this. This is from D1. You can set an alert here. So we know for the next week, we only focus on buy, but we gotta wait for sometimes to retrace back. This is something that sometimes confuse many people, like, okay, which order block that I have to see? Well, just focus on the current situation. And then after you focus on the current situation, then you can take a look to the left for a history where the price may react to it. Okay, based on the current situation, we know that US dollar Canadian is going up, right? But then if we take a look at this is another sideways. So this is break of structure. This is your swing high and this is your swing low. And where is your order block? This is your order block. Look. So now you're probably confused. Do I have to buy? Do I have to sell? Again, like I said so many times, with the order blocks, you can buy and sell like ping pong. So from here, you can sell, but according to higher time frame right now, meaning you are counter trend because the market basically is bullish, right, on the current situation. But when you're looking left, there is an order block. So there is also possibilities for you to be able to sell for retracement for the market to reach the order block. But again, when the market is bullish and it's very strong, there is no guarantee that this order block is going to be hit by the price. So always be cautious if you want to do counter trend because the price might just go down a little bit and then goes higher. So when you look left and you see another order block that is not being hit, yes, it is possibilities, but be cautious because the overall trend is buy. If you are very new to trading, you just wait, you just ignore this, you do not need to trade sell. In case the market strong, then you will be taken out and the market will keep go higher. Let's take a look. You see that this is still in the zone. You can make it as your swing high, swing low, and this is the order block. And yeah, the market still can go down below or probably not really and just keep going up. So US dollar Canadian, I will focus on buy. Since this week all market has been like really play Superman or drop dead like this, so it may take some time for you to see another chance to sell because the market need to retest to order block within our higher time frame. So you may need several days, you may need like 2 or 3 days or probably no trade at all the next week. It doesn't matter, sometimes it happens, but you just want to follow based on the market bias for safe trade. Okay, and let's go now to AUD dollar. Downtrend is an obvious look. It's going down. The market may retest up here and then go down again where it could retest, and this is your swing high, this could be your swing low, and this is your break of structure. So your order block based on D1 is this. You see, when you take a look at the trend line, the previous trend line, when I draw it like that, right, when the market make a breakout, it usually make a retracement and come back. It makes sense if the price come back here, probably touch this trend line around here and then going down. So you only want to sell, even though that it may need some days for you to wait. Just be patient. Most people always feel itchy, there is no trade, because the order block is the patient game. Unless you want to scalp it, you can make your market analysis based on M30. But always, to me, the safest way, even when you scalp, always take a look the market direction based on D1 overall. Because what happened, even though, for example, on M30 or M15, for those who want to scalp, that the market looks gonna be bullish, remember the higher time frame is really strong. So always be cautious, always take a note what is D1 bias on the trend, and then so when you go to M30 it will be safe. Once the market bearish, then you can start scalp on M5 or M1. Okay, I think that's about it, and I hope that you learned something. In the next video I will try to explain about the money management, because I noticed several people still trade using the same lot size for many different pairs, which is wrong. So I will discuss that in different video. And as for today, that's it. You have a great weekend and safe trade for the next week. Bye bye.